differences between an ETF and a mutual fund. We have really made that switch to the ETF space for our taxable accounts. We think it's smart. We've relayed and communicated that to our clients. But I want to hear some insight from you and maybe just those differences to elaborate on that.
Sure. And we have, to your point, launched ETFs and converted some ETFs over the last few years. So this is definitely a hot topic. ETFs have been around for a while, but dimensional is a relatively new entrant into that space, given the laws that you hit upon. The actual ETF rule that was, approved by the SEC is a little complicated, so maybe we won't fully go into it.
Right.
But I think it's important to start with the similarities. When you're looking at mutual funds and ETFs, especially when you're looking at it in the context of what you and Claris is recommending for your clients and what dimensional is bringing to these funds and these vehicles, it's the same philosophy. We're able to tilt towards small value, high profitability, things that you likely are well aware of in both of these vehicles. Our portfolio managers are able to do the same thing within the vehicles. So those are at the base level similarities,
Right.
and that's what's important. You want to make sure what you're investing in is what you hope to achieve out of an asset allocation. The differences being some nuances of the vehicles, primarily how an investor might trade within them. So a mutual fund, you can enter or exit the mutual fund at the end of the day. ETFs trade on an exchange, so you can trade at any hour of market hours.
Right.
So that the access is a little bit different, but I think the biggest difference and what's probably most interesting to you and to clients of Claris would be the tax efficiency aspect of an ETF. So there are some nuances in how the vehicle is structured to allow an ETF to be a little bit more tax efficient, especially on the capital gain side, than a mutual fund vehicle.
Right.
So you mentioned you utilizing them in taxable accounts.
Right.
I think that's a great way to think about it and how we're thinking about it at Dimensional too.
Right. And it's not that Dimensional didn't have the tax management strategy funds that did far and above better than anything you've seen. This just takes it a little bit a step forward on the tax side, and again specifically on the capital gain side.
Exactly. The mutual fund vehicles were always very tax efficient,
Right.
especially those that were labeled as tax managed.
Right.
Those were the ones that converted, and we've historically kept that tax efficiency very high. The ETF just gives us a little bit of an edge above and beyond that.
Exactly.
Yeah.
Alex, thanks for being here today. Thanks for sharing with us. We appreciate it. Until next time, thanks.